Hey everyone, it's Daniel here from InfraRes. Hope you're doing well. Got an interesting video for you, kind of different than what I've been used to. And I want to tell you about a story, and I want to talk to you about this neighborhood here. Now, before I move on, don't video and don't drive. Don't worry, I'm going to stop for a second. But I'm in a neighborhood actually, let me pull on the side here. I'm in a neighborhood where in 2020, so if you remember the pandemic that happened, I'm sure you guys remember, 2020 in January when it started, and then we had the stock market crash, and you had a lot of the sell-off in the equity markets, right? Sell-off in the equity markets from January to March, and then you had the Federal Reserve come in and basically cut interest rates, pump trillions and trillions of dollars into the system. You had the same thing among all central banks around the world, coming out and slashing rates and basically easing in a time where we had this virus, right? We had this virus. We didn't know what it was going to be, what it's going to bring. Took a lot of people out of jobs. Unemployment rates skyrocketed, right? So the Fed had to do something. They had to intervene, and they had to stimulate and inject the economy with a lot of money. So same thing here with the Bank of Canada, and me living in Canada, and seeing how the property prices skyrocketed, especially in 2021, due to all the injection of quantitative easing, the money printing, and the low rates. Now, closer to the end of 2020 and in 2021, I went to a builder, and they had kind of showcase of a lot of they had an area which they bought up, and they were selling pre-construction homes. So when, on a weekend, I remember a lot of people around there who were crazily buying properties, insanely buying properties. I remember one or two guys, like maybe even more, but I remember one guy in specific who was literally just in this area where I am right now, buying 3 or 4 properties, just one guy. Now imagine that when you quadruple that, and when you got more people, just a single person going out buying a couple of properties because they're taking advantage of this QE, the cutting of rates, and taking advantage of the property prices before they skyrocket. And lo and behold, in 2021, yes, property prices skyrocketed. You saw a lot of homes doubled, homes that were, $1 million turned into $2 million, and people were crazy property rich, right? Now, also in 2020 and 2021, not only you had the pandemic that people were still dealing with, Canada especially was very strict and stringent with the rules. Obviously, around the world, you had supply constraints, supply issues, where the price of lumber skyrocketed, because again, having a tough time to find labor, having a tough time to ship many of these, ship lumber, to ship commodities, just because of lack of labor and the increase of demand, right? So, and let's not forget also the injection of all this money, right? So, which brings in the increase in demand. So, fast forward, right? In 2021 and 2022, I remember this area especially, there was a lot of halts in terms of the houses being built, right? So they were planned, these houses, before the pandemic, were planned to be built by 2021. There was a delay, and a lot of these people who were supposed to take ownership of their homes in 2021 ended up getting it way later, right? In heading, especially in 2022. And I remember in, you know, close to the end of 2021, even the beginning of 2022, this area was nothing but flat land, right? And just because of that delay. And then all of a sudden, when they got enough supply, and especially because with the bullwhip effect, what happens with the bullwhip effect is that when you order a bunch of stuffs to fulfill the demand, and then eventually, you know, heading into 2022, when you have the crazy amount of rate hikes and that, you know, lumber or the delivery that you're supposed to get comes in a little bit later, you then take that commodities, you then take those orders that you get, and you start building like crazy because you got to do something with it, right? And second, also the builders need to go out and they need to push out and get these properties out there to the consumers. But now, driving through this area, it's very shocking to see, well, not shocking, but, you know, expected kind of. We've been talking about this on our channel for a very long time. A lot of these houses are either not fully built yet, and these houses, and especially the ones that I'm looking at right now, and I don't want to turn them, you know, I don't want to point individually at a certain house or anything like that. I don't want to, you know, just for the privacy of you know, this area and the people who own these properties and whatnot. But I'm looking at some right now, and I see that for months, so after we had COVID, big shoot up of people buying properties, delay in getting the houses from the builders, and then a skyrocket in building. Then you had the rate hikes in 2022, and then getting worse because, you know, Bank of Canada, the Federal Reserve, all these central banks kept at it, doing not only 25 but 50 basis points, 75 basis point rate hikes, and going aggressive at it. Heading into close to end of 2022, we saw a surge. So in the beginning, you had a surge of building, and then complete halt of building because demand has been completely crushed. So demand has been completely crushed, and I'm seeing for sale signs that's been up for more than 6+ months. I'm seeing these houses that are half built here for more than 6+ months. And the houses that are built, they're not the owners own them, but they're not occupied. No one's in there. And when I drive through this area, I see, even though they don't have, some of them don't have a for sale sign on them, I see lock boxes on the front of the door. And not just one, but many. Now, there are some houses here that are also occupied and people are living in them. But when I drive through, and if I do this right now, I'll just count a couple of them for you. So one right in front of me, under construction, half done. It's been 6+ months right in front of me. Nothing's been fixed. It hasn't gone through, right? And why is that? One could argue that, hey, the person who was supposed to commit to the builder on this house, you know, either something has happened, or, you know, most likely the likely case is that, hey, they couldn't get the financing from the bank because of rates went up so much. Obviously, you're going to value the house much more differently, and you're going to have to put a bigger down payment. So then what are you going to do? You're going to say, hey, I can't buy the property now. It's too expensive. We're in hard times right now. So one right there, second one in front of me, third one, a fourth one. Here we go, a lockbox, fully built. So we got 5. Let's see, another one here. 6, lockbox right here. 7, another lockbox. That one, no lockbox, but it seems dark. 8, lockbox. Under construction. 9. 9th one with the lockbox. Okay, so that's owner occupied. That one's owner occupied. right? Okay, so now here we go with the still under construction for about 6+ months or more. So we got 10 under construction, 11th right there, 12th, 13th, 14th, 15th, 16th, 17th, 18th, 19th. You get the point, right? And now if I turn left here on the street, there is a for sale sign for one of the houses. And again, I'm speculating here, and I'm not going to turn around, I'm not going to turn this camera and point towards this realtor sign, but on the realtor sign, it's very interesting. Somebody has taken a marker and basically drew around this person's eyes, right? So I don't know, you could take it as any way that you want. What does it mean? Could it mean that there are some construction workers who are working and are just simply, pissed off because, hey, the builders have completely stopped building in this area? Now, obviously, because if you've got a lot of people who backed out, right? A lot of people who have backed out on purchasing the houses, demand is completely crushed in terms of buying houses, and you lay off, let's say, any of these workers and people working in construction. They this is their livelihood. They got to make their money, and you tell them that, hey, we don't need you anymore. You could suspect that there are probably some workers who are pissed off, right? And hence the marker around that realtor's eyes. Or again, I'm speculating here, or just simply it might be a kid or something else. But why I tell you this story, again, has to do with the issue in the real estate market here, the issue with the amount of leverage that was used 2 years back, and now you see basically a complete halt in demand, complete halt. No one's really buying. If I go in that neighborhood over there, I see also two or three for sale signs as well. That's been up there for also more than 6, 7, 8 months, right? Now, when I go on realtor.ca, very different situation there. I don't see any of these houses up for sale, right, on that website. And it makes me think, what's going on? Now, the investors back then, right, who bought 2 or 3 properties here are either waiting for the markets to pick back up, or 2, with the lock boxes and the amount of lock boxes that are there, they probably are listing it or selling it privately and doing it through that route, which makes it look like, when you go on realtor.ca, that the supply is still short, right? So now you have a demand that's completely been crunched. On top of that, not much supply on the realtor.ca, and then on top of that, the builder also waiting, and they can also control the supply completely. It still keeps the prices elevated. And when I look at even the houses that are on realtor.ca, and when I look at the houses there, they're still pretty overly priced. They're still priced at 2021 levels. So what's happening here, right? You see the stock market completely different. You look at REITs, right? You look at office REITs, right? Where office REITs, where you see complete plunge in their share price, about more than 50%. And you look at other REITs as well, complete sell-offs. Yet you look at the private markets in terms of housing. You hear about Blackstone, you hear about BlackRock, Blackstone especially, who's basically defaulted on one of their mortgage funds, who have halted withdrawals. Same thing with BlackRock as well. And now on top of that, you're hearing bank runs in the US. I mean, this is just the beginning of what's to come. Now, if there's not enough pain right now, I really wonder come summer or end of this year, especially if rates continue to be higher or stay high for a long time, or if they do end up moving up higher because inflation's not coming down, I really wonder how this is all going to play out, and how long are people going to be able to continue to pay the mortgage payments, not on one property, but multiple properties, unless they're really cash rich, and a lot of them are. If they will they be able to handle holding on, or will they panic sell, which might cause the prices to come down? Now, RBC says they foresee that this year and the next, for housing prices, the correction to be the worst one out of all, right? Out of all the other corrections I've seen. So they see a very strong correction that will show up in this market. On top of that, a previous video that I did, 10% of Ontario's mortgage originations are private loans, private mortgages, which are high yield, high interest payment loans. Back in 2016, I think it was, that number was only 5%. So I'm sure there's going to be some pain to come, and you already see it also with the commercial real estate market as well, where Blackstone and also a lot of property managers are feeling the pinch, because hey, especially the office properties that where you don't have people utilizing it, or you're not making much money off the rent, they're starting to default, right? And if that escalates, it goes back and ties back to also the bank runs, the small regional banks that have lent a lot of money to these commercial properties. You can see this exacerbate even more, where not just 2 or 3 banks going under, but more than that. And I think I was hearing somewhere, don't quote me 100% on this, but I think in the 70s or 80s, when rates were really, really high, just like how they are today, but obviously not at the same levels of 1970s, 80s. At that 80s was 20% interest rates. We're definitely in a different era time now, but still rates that are very high in today's terms. Back then, there were about, I think, 1,000 or 1,600 bank failures. So this is not a fear-mongering video, right? For real estate, anything can happen, especially depending on which market you're in. But definitely, I put this out there to not make you worried, but to get you prepared and be ready. Be a warrior than a worrier, and be prepared for what is to come, right? Especially if things end up being worse than expected, especially if inflation is not coming down. Then guess what? And we have the Federal Reserve coming out next week, and it's going to be very interesting to hear what they have to say as well. So let me know what you guys think. Do you see something similar in your area, in any neighborhoods? Comment below, let me know what you think. Subscribe, hit the like button as well, and the bell icon to be notified on the next video. I'll see you guys around. Cheers, bye.